What's up, y'all? It's Tommy here with Everyday Finance, and in this video I'm going to be talking about the Upstart lending platform and how they're planning on trying to replace the FICO credit score. So if that's something that interests you, be sure you stay tuned. So I don't intend to take too long with this video, just to jump straight into it. If you haven't heard about the Upstart lending platform, basically the way that platform works is they want to kind of build out what is sort of like a marketplace, right? Their idea is that, they want to be able to create a place where you can input your information and then they can present you the best possible loan for whatever your needs are. Now, right now they're focusing on, or mainly focused on, personal loans, but they've started getting into auto loans, and I think they want to venture into student loans within the next year or so. Now, in this video, I'm going to be focusing strictly on personal loans because I think that's their longest selling product, and I think that's the product that is going to have the most benefit, especially with what I'm going to talk about here in a bit. Now, these personal loans kind of go from $1,000 all the way up to $50,000, and that's going to depend on multiple different factors as well as what your state laws are. The benefits of the Upstart lending platform. One thing that I found that was crazy is they actually use about 1,000 different data points to be able to find a loan that'll work best for you, right? So they don't just look at a credit score. Now, what their plan is, and kind of what I'm looking at is, and they've gone public, you can see a lot of this information in their SEC filings as well. But I think what they're going to end up doing is they're going to keep collecting different data and make sure that their algorithm is working well. And once they see that they're actually able to, do a great job of assigning loans to people at different rates and different terms and things like that, then they're eventually gonna phase out the FICO score. They're not even gonna ask you or pull your FICO score at all. Me, what I like about them is they actually are one of the quickest out there, right? They say that 99% of the loans are funded within one business day. So that means if you were to apply for a loan today, right, and before 5 p.m. Eastern time, you accepted that loan, then you're going to be able to get it the following business day. Okay. Now, they don't do any hard credit pulls to actually check your options. It's a soft pull. So that's why I typically recommend people, especially if you're in a situation. I'm going to talk here in a little bit what the loan is best for. But if you're in one of those situations, then go ahead and just do a soft credit pull to get an idea what your options are. That doesn't affect your credit at all. And you're able to know if it's actually a good fit for you. Another great thing is most of their borrowers are automated, right? So basically most of the loan applications are completely automated, literally end up getting instantly approved. Now, the entire application is online. The only time that is not automated, that 30% or roughly 30%, is whenever additional information is needed, right? Maybe they need to check your identity, whatever it could be, right? And that's whenever someone is going to reach out to you and ask you to send in additional information. But for 70% of people, it's going to be all done online, and you're going to get literally, it's pretty much the entire process automated, so you can get approved with pretty much immediately, right? Almost instantaneously. So the platform works pretty simply, right? You apply on the site. It takes about 5 minutes. You get a soft credit pull, and you will receive an offer for typically 3 to 5 year loan terms when it comes to the personal loan. And offers presented by the partner banks. So again, Upstart is just a platform, right? And that's what I think is so great about them. And also at this moment right now, I'm working on trying to talk to them about working through a partnership, because it's something that I want to even provide to a lot of my clients whenever they're in a situation where it best fits them, right? Because it's essentially a marketplace where you're going to see a lot of banks are going to have to compete against each other to get these customers, right? And I think that's what's going to drive even more attractive rates whenever it comes to personal loans. These are pretty much best for, I really look at 3 scenarios is what I found. Okay. The best one is credit card debt consolidation. And the reason why I say that is because typically that's what's bringing down a lot of people's scores. 30% of your score is your credit utilization. Now, if you're able to get a personal loan and use that loan to completely pay off your credit cards, then you're going to see a huge jump in your credit score, right? Your score is going to just drastically jump up, and it puts you in a better situation, especially if let's say that you're looking to get into a mortgage or you want to eventually buy a house. This is going to be a route that you might want to take depending on what all other factors you have at play with your credit profile. So that's one of the best options that I typically see. There's also just regular debt consolidation. So any types of debts, not just credit card debt. So really you want to look at high interest type of debts, right? If you have any type of like payday loans or, cash advance loans, things like that, that might be a route that you want to go. Another option is medical expenses. Those can be something that you also use a personal loan for, especially if you get to that point where they're about to send it off to collections and you're not sure how to go about paying it. It might work out for you to get a personal loan. Okay. Now, when it comes to the requirements, first off, in most states, you're going to have a credit score of at minimum 580. Okay. So they want to see a 580 in most cases. You cannot have any bankruptcies or public records on your credit report. And also they don't want you to see that you're reporting any accounts that are currently delinquent. So basically you want to make sure that you make sure all your accounts are current before you actually apply for that loan. I typically recommend you get your accounts current and then give it 30 more days. It might be better suited for you to even pull your credit report yourself to kind of make sure that it looks all on the up and up. Make sure that everything's showing up current, and then you can apply. Okay, so that's the route that I typically recommend. Now, guys, honestly, I want to say that this is something that I wanted to just touch on, because I think that, the way they're going, it looks like they're gonna start using other factors to be able to, they're already using other factors, but they're going to really hone in on those other factors to be able to decide who gets approved and who doesn't, and even more so what kind of rates you're getting. A lot of times, for those of you guys who have experienced it, a lot of times if you have a bad credit score, you're already screwed from the beginning, right? You're going to get a higher interest rate. You might not even get approved for the loan you're trying to get. So they're trying to essentially democratize that system so that you're able to still not only get approved, but get a great rate, because, well, yeah, sure, you might have a bad credit score, but you have all these other factors in your financial profile that are looking really good. Right? You have a great pay, you pay your debts and everything on time. You shouldn't get penalized for a mistake that you made 5 years ago, especially if that's like the only mistake you have, right? Things like that. So I think this is a great program. You can check them out down below. Again, I'm currently working on them hopefully I want to do a partnership with these guys, and then maybe I'll shoot other videos on them, because I think this platform is going to be something that's really game changing. I was even seeing a report that was saying that even the FTC's kind of released a no action letter to these guys, essentially saying that, they see how much of an impact this can have on society. So they don't want to tamper down, because they're doing something different, right? The kind of artificial intelligence type of stuff that they're doing right now with the 1,000+ data points is something different. And the FTC doesn't want to step in and try to hamper them, right? When it's something that's helping society so much. So definitely, I recommend you guys check it out, especially if you're in one of those situations I mentioned. Check it out. Maybe even get have your credit pulled, do a soft credit pull, and see what kind of rates that you're getting. If you're getting better rates than you would, with the credit card that you have, it might make sense for you to get that loan and use it to pay off the credit cards and put yourself in a better situation, right? It all depends on what your specific situation is, okay? So that's gonna be the gist of this video, guys. I hope that helped you guys, get a little idea of what's going on in the marketplace and how everything's changing in the financial space. I hope you appreciated that video. Make sure you throw a thumbs up if this video brought you any value, and hit the subscribe button down below. Alrighty, so that's gonna be it for this video, guys. I appreciate y'all watching, and I'll see you at the next one. Peace.